Good evening. Ira Epstein with your SPDR ETF stock wrap-up. And this wrap-up is for Wednesday, the 8th of June, 2022. Couple of things. Hey, if you like this, why don't you hit the subscribe button, because when they come out, it tells you right away that they're there. In addition, if you like them, give me the thumbs up. It helps us with the algorithms. All right. Interesting day, some interesting conversations I was able to listen to in depth today on CNBC. It caught my ear and I dropped everything and I just kept listening. It's about 10 minutes long and it was a good one. I think it was from Mr. Greenhouse, Don Greenhouse, I think it was, and others joined in. But he was articulate and able to explain his ideas, and I agreed with them. Number one, most of the interest rate hike in the back end of the yield curve has occurred. We're over 3% in the 10-year. So let's assume the market goes up another 10 or 15%. It goes up to 3.5, 3.7 maybe. It's the front end where this is all going to be happening. That's what the Fed controls, and that's what they're going to be running at. So I don't think the back end is really the danger zone. It's the front zone, and that can come up quite a bit. The market's already anticipating that. Wage inflation is here. It doesn't go away. It's here. All right? In order to break it to a degree, we got to get people back to the workforce. One of the stupid things I keep hearing is the airplane pilot shortage. Well, the airlines and the union have to get together. The 65-year-old mandatory, I want to use the word mandatory retirement age, is very similar in my mind to zero-tolerance COVID policies in China. We are not our grandparents any longer. We're healthier as a group, typically. Those that are flying are different. They're more educated. They've been doing this. They're certainly skilled. Yes, they should be tested maybe more regular than a regular younger pilot. You can do that. But you need these people. Number two, they might need you. What do I mean by that? If you looked at the price of gasoline and the price of food, you retire, you set what you think you've got, and all of a sudden you find that everywhere you're turning, this is all getting away from you in price. Number two, maybe you're looking and saying, I don't want that 40, 60 hour a week, whatever it is, job. It doesn't have to be airplane pilot, obviously. They're limited how many hours they can go. But the idea is there's a workforce of older people probably coming back to the market for the reasons I'm explaining. I saw this discussion today as well. Number three, did you see what happened in Odessa? I think it was Odessa, Texas. I could be wrong in the city. It's the port in Texas where there's LNG. There was a big fire today. The port's out of commission for I don't know how long. They didn't give the details yet. And natural gas in the U.S. fell 10%. Just like that. And you'd say, why? Supplies cut off. What's going on? We don't put natural gas on ships there to move other spots of the U.S. typically. That's the stuff that is going abroad. That impacts their price. It suddenly means that that natural gas is available to the U.S. market. Out of this port, 16% of the exportable natural gas out of 7 ports in the U.S., makes up 16% of it, is out of commission for export. That puts it back into the U.S. market. That's where it's going to go. Okay, prices come down because of that. What if the port's fixed in 2 weeks? I don't know. We've got to find out more information. But this is some of what's going on. You've got to pay attention to it. Tomorrow we're going to get the European Central Bank monetary policy announcement. Big battle been going on. When they raise the rate, is it a quarter point, half point? When are they going to start the balance sheet runoff? How big is it going to be? Blah, blah, blah. Then on Friday, we get the all-important U.S. CPI number. Be careful of that number. It could be too hot. It could be not hot enough. I don't know. I've read reports of 8.2% on a yearly basis. We'll see. What if it comes in 7.5? Market will be friendly. What if the market's at 8.5? It's going to be a hot number. It'll scare the market. This is what you're dealing with. A lot of people think that in this quarter and next quarter, the second and third quarter of this year, we're seeing peak inflation. Okay, but in what? Does it mean the whole inflation is done? Wage inflation doesn't go away. Your rent inflation isn't going away. Your new mortgage rate isn't going away. Do you understand what I'm getting at? Those are real inflationary numbers that you have to live with. Gasoline prices, I promise you, are going to change up and down, all right? Food prices are going to change up and down. So the question is what's moving where and what component does that make for the overall inflation? Just keep it all in the back of your mind. People like to write articles and they're writing often what they say. They're wrong in the bigger picture, often I've discovered. When we look at Apple, big battle going on. You can see the churn that's just taking place. It's almost like a circle of churn going on right through here. You've got a higher high and lower low. You're not in a trend in the market. The market's made a stand against the 18-day average of closes. It's seen a bearish crossover where the 50-day moving average got under the 200. But in all fairness, it's a failure crossover right now because prices haven't gone down for new lows on the move just yet. They got to get under these lows for, in my opinion, as a chartist, for it to say, okay, that worked and we'll see where it goes. The next thing I look at is the Bollinger Band. If the market rallies, number one, it's going to do so with a lower and low, higher high. It's not a trend. The resistance will be the upper Bollinger Band. That number's sitting at 153.45. If the market breaks from here because it's got a higher high than the previous high, it's not going to be in a downtrend, and maybe it gets to 136.78 and it's overbought. I don't know what to do with it. When I don't know what to do with it, I go, so long. I don't have to do anything with you. AMC, I'm reading all these bearish reports and I'm laughing. They don't know the movie business. Okay, they know finance. This company's got serious financial issues, but maybe they get resolved from a blockbuster summer. We don't know. Down here, I told you I thought that was the last hurrah on the break. Why? Because now we're getting into the kids and the big movies. They're coming, the concession stand sales. But the resistance will be 14.52, the upper band. If you move from there, 16.57, the next 100-day average resistance. Support back at 10.62. Actually, it first comes in at the 18-day average. I'd rather be long than short. And I'm the big bear, right? AMD, not friendly on this at all. Market peaked out against the 100-day average and the upper Bollinger Band. And I'm reading reports that the semiconductor prices are starting to ease, and there's more of them coming online. That is good news. Where they're coming from, I don't know. But maybe we're going back to the 18-day average. You're not in a trend. You have momentum down, but you have bias up. The chart's a mess. Disney can't get out of its own way. This is ever since they got into that fight with Ron DeSantis in Florida, the governor there. If this market gets under 106, it throws out actually a new bear signal. And that could be saying you're going back to 101.14. First, it's got to be able to get under it and stay under that 18-day average of 106.60 for that to come in. But right now, that's the live play. Nothing on the upside just yet. In XLF, you're out of the uptrend. You're not in a downtrend. You're in no man's land. Momentum was overbought, correcting at this point. XLI. So the market's still embedded. It acted pretty good today, or did it? No, it didn't act that great. It's embedded. What does embedded mean? Maybe we should talk about that for a minute here. It means that, and boy, I love my new tool. I'm just learning how to operate it. I'm not as good as I was on the other one, which wasn't that good anyways. But as you can see, both numbers are over 80, both over 80. Both over 80. So you got an embedded reading, which means to me the pros are going to buy the first break in the market, which they had today, and they'll get out if the red line closes underneath 79. It's nowhere near it. The reading is at 87.97. Then XSD has a downtrend on the swing line, lower highs, lower lows, but the bias is up, so it calls for a move back to 176.44, but it doesn't mean you've started a real downtrend. You have to start closing with verve underneath 176.44 to open the door to 164.18. It could happen, but it's not there at this point in time. There's nothing bullish on that chart. In the home builders, you still have the embedded reading. I am amazed that you do. I want to be honest, amazed. I would not think that's the case. I think if the market sees the red line close under 79, it's a lockup. You're going to go to 61.12 very quickly. Tomorrow's D-Day in this market. It's either good or bad. It's going to prove itself tomorrow, I think. I think the pros bought it today, by the way, here. Nothing wrong with that. I think they bail if you get a 79 reading, and if they get lucky, 64, 64. But I don't see anything to really make it lucky. Let's go to the next chart if I could here. There we go. Energy. What do you do the first time you hit a Bollinger Band? Today's high was 93.31. 93.19 is the upper Bollinger Band. What are you supposed to do? Have you taken my Bollinger Band course? What are you supposed to do? Okay, you know. By the way, that brings me to something. Have you hit the subscribe button on this video? It's right there in front of you. Do it. When I put these out, they're right in front of you instantly. As soon as they're ready to view on YouTube, you have them. Higher lows, higher highs in gold. I think the pros are buying gold. At 171.97 to 171.95, I think it's going to be worth on their part. They're thinking at least, a 34-cent risk to 171.64. Get under that, I think they bail again. Gold has just been this ultra disappointing asset investment. I think it's terrible, but people like it, so, you know, a chart's a chart. In GDX, well, you're not in anything. You have an uptrend that has to prove itself. So it can't afford to get under 31.97. If it does, it loses the uptrend. It actually turns into a downtrend, calling for a move to 30.66 very quick. Momentum's down. That'll put it under the 18-day average and give you lower highs, lower lows. It hasn't happened. So the bulls are going to try to defend 32.06. We'll see what happens in that 9-cent spread. It's going to be interesting. In the copper market, I wouldn't be surprised that the professionals are taking money off the table. You've stalled at the 100-day average. The market's clearly saying it's not ready to give you that jump to the upper Bollinger Band. You have an embedded reading, so I think people are taking money off the table, but I don't think they're coming out of their total long position. To do that, the red line has to close under 79. And it's got a reading of 87.51, and you still have the possibility of 42.51. But did you ever hear the term lighten up? AGG. So let's talk about this, BND, TLT. Do you really want to be long going into the next Fed meeting? I don't know. That's up to you. I don't. Second, do you really want a long position going into the CPI numbers on Friday? That, to me, is the big number of the week. That's what everything's going to hone on. There'll be all weekend long people writing about it. It's too strong. It's not. It didn't come in as strong. There's a sign that inflation has peaked. You're going to hear every story. I don't know what it's going to be. Why do I want to put myself through that? And you already hit the Bollinger Band. AGG. You might be headed down to 101.76. Again, you've got time in front of Friday's meeting, but I wouldn't have any position on for Friday's CPI numbers. You are already oversold. You're on borrowed time. You need to get down there. If you can get there, I think you'll see short covering. In the dollar index, it doesn't get more neutral than this. All you did is you put on a rally against the 18-day average of closes. The bias is down. You were oversold. You've corrected. You lost an embedded reading. You got to the 18-day average, and now the market's got to decide what to do, which means the euro's got an interesting picture. But here's my fear in the euro. The futures market is throwing out sell signals. That's ahead of this. Be careful. If that's a false signal, then this holds up. But there's no buy here. You've got lower highs and higher lows. There is no trend at work, but you have an embedded reading, which gives you upside bias until a 79 reading or low, actually under 79, is seen on a closing basis. Then I'm going to look for 98.51. You're at a dangerous spot. Watch the futures. And that brings me to the whole key of what I'm leading you to. You know, one of the things that I think you always have to do is pay attention to what you can get for information. And I know you're all looking for trading ideas. I look for them all the time, just like you. So if you trade futures, ETFs, you're looking for ideas, maybe, just maybe, we have some ideas for you. At 5:30 in the morning, I start recording my future subscriber video. It's very different than these. Buy here, sell there, do this, do that. I'm going to be wrong, I'm going to be right, all right? Hopefully, I'm way more right than wrong, and dollar-wise, I better be more right than wrong. Otherwise, I'm not going to keep my subscriber base, and it's growing. Second thing, I backed that up at 9 o'clock with a Spider ETF video. Why? SPY, DIA, IWM, GLD, SLV, TLT. Want me to go on and on how many Spiders ETFs are completely dependent on what the futures do. So I cover all this for them. Then I come in and I cover for you all of the ETFs do the same thing. You get a double back-to-back. The videos are 20 minutes long. I know not everybody has 20 minutes. So in the video, what I end up doing, there's a scroll bar, and you can either go to the stock indices, the energies, the interest rate sector, the stock section. It's all broken down. You slide it, you're not wasting your time. Time is your enemy. So how do you get this? It's really simple. Just scroll up if you want. Hit the cursor, the icon will take you right to the area. Or on our website, if you go there, simply go and look at the word research. It's all explained in detail. We keep our subscribers, a great many of them. So if you're interested, all you need to do is that. I'm Ira Epstein. I'll see you tomorrow. Remember to hit subscribe. It's free. And thumbs up, I hope. Take care.